Good morning, everybody, and welcome to the Global Energy Outlook Forum 2026, our first Asia panel. We've had two very useful interviews in the first half hour of the forum. We had probably one of the world's most important traders in Asia, the head of Vitol in Asia, of course, the world's biggest independent trading company, Kieran Gallagher, giving us his views, outlook for Asia, particularly China, but generally Asia seeing a positive 3% plus growth across the region, and in particular it expects similar stock building in China in this coming year from Kieran Gallagher at Vitol. That's the Vitol House view. And we also had then a macroeconomic view out of Hong Kong. So we've heard from Singapore this morning, we've heard from Hong Kong, and now with the first panel, we're going to pop across the region, Singapore, Australia, and China. Let's go straight to China. Victor Yang, senior analyst at JLC Network Technology. And the question of this session is, how will the transition's top spot on China's energy security pyramid impact oil and gas demand in 2026? Energy security transition, renewables, solar, wind, everything else. As an energy security tool, we now see quite clearly with the events in Venezuela, maybe why China added so much to its storage last year. What impact will the transition's top spot on China's energy security pyramid, how will that impact oil and gas demand in 2026, Victor?
Good morning, everyone. Yes, as we see in 2025, China continued to build up its stockpiles because of energy security. And at the beginning of 2026, we even saw more uncertainties with the United States taking Venezuela president. And there is a lot of uncertainty regarding Venezuelan crude supply to China. As you know, China is a very big investor in Venezuela, and including in oil exploration. So now a lot, some particularly private independents face uncertain supply from Venezuela. So we are now waiting to find out how supply from Venezuela will be affected. And
would you expect that from an inventory build point of view, we saw according to Reuters, as high as 1 million barrels a day, other estimates a little bit lower, added to China's storage in 2025. Your expectation for 2026, would it be the same? Would it be more? What's your thoughts?
Well, I expect it to be below that level. Actually, even in 2025, the stockpile building was not as high as 1 million barrels per day. And we expect to even slow down further in 2026 after relatively large stockpile building in 2025.
What was your number for 2025? What was your number inventory build in 2025?
Well, in 2025, we saw close to 800 TBD. And in 2026, I think it will be below this level. So it can be up down to about 400, 500, because we had already seen quite large stockpile building in the past few years.
Let's go to Singapore. Okay, yeah. Let's go to Singapore with Chong, Director of Research, Wood Mackenzie. What are your thoughts, Yan, particular on the position of China's energy security focus on the transition? It's interesting to hear Victor say there that he expects the stock build to decline. Is that because transition renewable fuels will increase? What's your view on that?
No, to be honest, we expect actually China's oil consumption to grow. Not by much, but by about 150 to 200 barrels, 1,000 barrels a day, right? But the focus of this growth is directed mainly towards petchems, not to conventional transportation fuels. right? Because the country is moving away from traditional transportation fuels to renewables, to electric vehicles, etc. But there's also this huge drive to be self-sufficient in petchems, right? And there are a lot of new petchem capacity that has come online in the last couple of years. And a lot of these petchem capacities in the shape of the private refiners, Longshan, Hengli, Shenhong, Yilong, are actually direct from crude to petchems, right? So these guys, yield is about, petchem is about 55%, right? So to them, transportation fuels are actually a byproduct. And we would expect to continue to see this push going forwards into 2026 into more petchem, right? But that said, at the same time, we do not expect the Chinese economy to go anywhere back to 2019 levels. Let's say growth will still be modest, 4 to 5%, and the focus will be more on growing technology, growing in certain specific sectors. Like petchem is one of them.
So Jan, you expect China's oil consumption to rise by about 150,000 barrels a day in 2026. What about the amount of excess oil they buy in order to put into storage?
Well, to be honest, we think, okay, last year, I do agree, Victor, is about 800, 900,000 barrels a day, right? I don't think it's close to 1 million. This year, we do expect a little bit less. How
Why?
much less? Well, because they already have so much in inventory, right? But what's happening to Venezuela may change that a little bit. So if you think about Venezuela, how much oil does Venezuela supply to China? Venezuela supplies about 4.5 to 5% of China's total imports last year, right? And given the amount of oil in floating storage right now, I mean, they could be not just Venezuelan, but Russian, Iranian. I don't think the Chinese would be in a hurry anytime to stockpile up because there is enough out there, right? And
Let me
beyond
just
the next,
suggest,
yeah.
I'm not sure, and I just asked the production team behind me if it's me that the sound quality for Jan is a bit poor, and I would suggest if it's not just me and the production team is having weak sound quality too,
Yeah.
Jan, that maybe
Okay.
either you log back in or you turn off your video so you save your bandwidth just for audio, because the most important
Okay.
thing is that we hear you clearly.
Right. Sure.
Peter McGuire, CEO, Australia Trading.com. What are your thoughts and outlook for the transition commitment to China in China in the context of the industry, sort of factory first industry strategy, and combined with this energy security obsession, which has to have been accelerated dramatically by events in Venezuela? Your thoughts on China's ongoing commitment in that direction and how it may or may not impact oil and gas demand?
Well, Sean, and great to join you. I think a couple of things. The landscape has certainly changed in the last week. We didn't expect this to be the start of 26 and to take on board what happened as far as Venezuela. We all understand, and building on what Victor said, energy transition, coal, gas, nuclear, and where does China see itself? Growth targets about 4 to 5%, new age technologies coming online, and of course, the overall momentum of the nation is still very, very strong. So, you can't argue with it, and you can't argue with Asia as a whole, because that's really the growth engine, I think, of the world, with population and certainly.
According to Vitol, still going to be well above 3% in the region.
Absolutely.
Across Asia. Very positive pictures in Vietnam, India.
Yeah, absolutely, Sean. I mean, India's off the charts. It's probably up to 7s and 8s. And, America grew at 4.3. So the world is in a hyper growth standpoint. Infrastructure, very strong. Data centers, you name it, we're building it. And the next part, it takes energy. So you're looking as far as electricity, what's happening with coal, nuclear, new age energies, and so on. And the storyline as far as oil and the consumption of that, naturally, it'll still be a very, very important component of China's growth engine moving forward. There will be 2030 and 2035, you'll be seeing as far as different perspectives from a pollution standpoint, but still in the short term, Sean, I think there's going to be solid growth over the next 5 years, and that's a good sign for China and certainly for Asia where it's positioned. Venezuela could be a spanner in the works to some extent, and if something was to happen in Iran, that would really change, I think, possibly geopolitical landscape, but let's just wait and see how that unpacks.
Let's go to the first survey question. We have 500 people registered on LinkedIn and across social media channels and for the Global Energy Outlook Forum, and we welcome them all and thank them. We have some survey questions for this session. China added about 1 million barrels of oil per day to storage in 2025. That's according to Reuters. Their number is just a little bit below that. How much oil will China add to storage in 2026? I mean, regardless of what the sort of total number was last year, whether it's going to be more or less similar or none. So A is none, B is less than last year, C is similar to last year, and D is more than last year. Which of these do you think best captures the outlook for the year ahead? According to, as I said, the head of Vitol in Asia, he sees similar, with current oil prices being the caveat. And then, of course, the old chestnut, Brent crude oil averaged $69 in 25, 81 in 24. So we had a $12 drop last year. What will be the average price in 2026? That's a number to think a little bit about, where one sees the year ahead. Victor, circling back to China's outlook, I wanted to get your thoughts on how China, from an energy security point of view, is looking at developments in Venezuela, which of course is an ongoing, it's literally like a fire that's still burning. The building is still on fire. It hasn't, the actual outcome we're seeing is not clear. But one of the instructions, according to King Trump, was thou shalt not export any more oil from Venezuela to China. So clearly that's not just for Venezuela, but how does China look at these unfolding events in Venezuela from an energy security point of view?
Well, some companies will have to think about alternatives to replace cargoes from Venezuela. And they have some choices too. But for teapots, the cost would be higher. So if there's a disruption of supply from Venezuela, some companies could buy less and cut their operating rate. Because as you know, Venezuelan crude has a high yield for bitumen, and some others might have to raise their operation. But it's still, as you say, still early to tell how supply from Venezuela could be affected. So they are making kind of preparation for different possibilities. And Venezuela cargoes will rise. Say in January, if they depart from Venezuela in early January, they will not arrive until March. So there is still time for them to come up with different measures to handle this one.
Yeah. What about from the point, I mean, you interestingly said you expect inventories to decline this year, the build in inventories, which is curious given the sort of red alert alarm bells that must be ringing on the back of the Venezuela decision by the United States to essentially what appears to be, and it's been articulated a number of times, get China out of our Western hemisphere. So it's not just Venezuela. It's the language being used in Washington is basically China out of the Western hemisphere, out of Latin America, obviously the oil supplies and other supplies coming from Latin America. Interesting that you would still see the inventory build being less this year. Why will it be less, given that there must be greater concerns about energy security?
Well, one reason is if there is a less supply from Venezuela, cost would go up for some refiners. And there is pressure from finance And another one is the storage capacity. Some tanks are still under construction, but they're not coming online anytime soon yet. And if refiners had to find alternatives, prices would be an important factor. So it also depends a lot on the price. But for the country, it has been building up stockpiles over the past few years. So it wouldn't be very important, critical to build up much further in a short time. Yeah.
Jan, I wanted to get your thoughts of sort of across Asia. Obviously, China obviously the biggest sort of 10,000 pound gorilla of economic relevance in Asia, but ultimately slightly weaker in its current health, but yet elsewhere, more positive story. What does Woodmac think of the wider macro outlook across Asia in 2026?
Well, I mean, basically, we think China is, as you said, modest, right? 4-5%, just like this year. We think the growth will still come from India. India has been the star last year, will continue to be the star this year. And the other one would be collectively coming from ASEAN, right? The growth in ASEAN has been impressive. Indonesia, Malaysia, Thailand, Vietnam, all these are growth economies. And we do expect similar growth year on year, and we expect then the collective to be driving growth in Asia for 2026.
Peter, where does Australia find itself in a year where we could be seeing a greater amount of this idea of a US-China Cold War, face-off, choose your sides? I mean, in the sense of the narratives coming out of Washington vis-a-vis, quote unquote, the Western Hemisphere. And in a lot of ways, although you're geographically located in a very different place, you are technically part of the Western Hemisphere in the sense of your own definition. How does that land in Australia at the beginning of a new year, and for Japan as well, and maybe even South Korea, as this bubbles to the surface a little bit more pronounced?
Well, I think first off, Sean, it's very much a perspective that Australia has had as far as a brother in arms with the US, Pine Gap, and of course the strong strategic relationship and from a war perspective, going back to the First World War, Second World War, Vietnam, and Korea. We've fought with the Yanks. They are as part. I think the average person my age would certainly be considerate that America is our big brother, and I think that's the way that we've looked at it for pretty much all of our lifetime. That may be a different lens now with younger people and a far more diverse, multicultural society. And how that unpacks in time is going to be very dynamic, Sean, because these are only very early stages as far as the situation with Venezuela and the impact that has to China. How does that really play from a tariff perspective? Is there going to be a backwash that affects us as far as consumption from China buying our goods and our commodities? We're really a 25 or 26 million population that produces an agriculture, wines, seafoods, base metal, industrial metals, and so on, and exports a lot of those into the likes of China and, of course, coal. So that's, I think, very much a part of the play at the moment. It's one of, let's see how it unpacks.
I mean, you've had Australia and China have its own spats in recent years before this sort of elevated Trumpian return. Australia seems to have navigated them. Is that shifting again, or is there anything in the year ahead? I mean, we have the very big summits this year between Trump and China. What Trump is likely to give up, give away. Does Australia start this year with a different sense of things, or is it more business as usual?
I think with a different sense because it's a different administration this time round than what we experienced in 16 to 20, Sean. And then the pandemic years changed, I think the lens or the terminology. So now it's very much a game on perspective of what President Trump's presenting, not only to domestic but internationally US. And this is the way that the US is now going to be looked at. So I think that we're in a very much a work in progress. Let's see how it again moves forward. But going back to what you previously said, the impact of South Korea and Japan, they've both had booming stock markets over the last 12 months, absolutely shot the lights out. And I think that the economic theme coming from both those nations is strong, robust growth, good GDP numbers, and of course, an uptick as far as production and consumption for energy, and it's just the way forward. So,
and Japan also finds themselves. Japan does find themselves in quite a spat with China at the moment, vis-a-vis the placement of certain missile capabilities in their South Islands. I mean, these elements of the geopolitics creeping in to the economics could derail some of the tourism, Chinese tourism to Japan. I mean, these are like you had your wine blocked for a while. The ability to navigate these, it could suppress that sort of more positive economic outlook in Asia. Your thoughts on that? If China and Japan and others were to start to get into this sort of with us or against us, choose your side, Trumpian world, could that suppress this more positive economic outlook for the region?
Well, I think it could. We want to see how Okinawa and those islands up from there going into the mainland, how they're impacted. And naturally, you've got the next part of the big jigsaw, and that is Taiwan. And again, it's a very much people are holding their center line, and it's going to be, again, a state of brinkmanship. What is President Trump prepared to do to come to some form of defense if China was to increase its strategic foothold or take a different viewpoint on Taiwan? And I think that this is, again,
could give it up. Could give it up. Say, let's trade. You get out of Latin America, I'll give up Taiwan. I mean, anything has to be in the realm now of what was unbelievable before. Now everything has to be in a consideration. Let's go back to the survey question in our last segment to get everybody to sort of put on the table some of their predictions for the coming year. The survey questions that we asked earlier was an oil price and an expectation on the inventory build in China in the coming year. If we have any those survey questions up again. Victor, I wanted to get your thoughts on, we've had your prediction on inventories. You said that you expect them to be lower this year if we accept the general narrative of around 800,000 barrels a day build in 25. You said you expect that to be lower, maybe half, 400,000 to 500,000 in 2026. Here, the general view is less. How much less, of course, but less than last year, similar and more. But you expect substantially less. You're sticking with that position, 400,000 to 500,000 build. What else? We had Jan tell us that he expects actual oil consumption to grow 150,000 barrels a day in China due to petrochemicals. What's your expectation on oil consumption rather than oil inventory build?
Well, on consumption, I agree, Jan. Yes, it's going to grow in 2026 because of the switch from oil to petrochemicals. A lot of state-owned refineries are conducting upgrade projects which will switch from oil production, gasoline, diesel, to chemicals. And we saw some of these projects coming online in 2025. One refiner can reduce the production of gasoline and diesel by over 2 million metric tons per year, such as one PetroChina refinery. And we see more of these projects coming online in 2026.
So more petrochemical capacity.
Yes, that's a major driver. And we also see the startup of a new refinery, a joint venture between Norinco and Aramco in Northeast China, 500 kbd, is expected to be fully operational this year. This will drive up the country's crude consumption too.
What about economic growth in China? What's your forecast on that?
Well, we expect the target to be largely stable as last year, say about 5%. And now we are seeing more switch, as you mentioned at the beginning, the energy switch transition. And we are going to see even faster transition in 2026. And another one is the technological innovation in some sectors. So, and China said at the meeting earlier, well, say in December, about the economic growth in 2026, about boosting domestic consumption. And one of the major issues is the target, I would say the target is to increase the people's income. But we are still waiting for specific measures about, well, raising people's income.
Well, give you a pay rise. Yeah. Everybody gets a pay rise in China. What about oil imports, Victor? What is your forecast? If you're expecting less, up to 400,000 barrels less inventory build, is that going to see less imports as well?
Well, imports are still expected to grow. As we said, there was a new refinery coming online, and they will consume more. So we can still expect close to 2% growth in 2026.
What does that translate to, 2%? What does that mean in total numbers?
Well, 11.5 times 0.2. So yes.
So 11.5 million barrels of imports were in 2025, and you expect that to grow by 2% in 2026.
Yeah.
Okay, let's give Jan and Peter a quick minute to give us their predictions. Jan, particularly wanted to get your thoughts on increased oil production supply across Asia. Chinese also very keen to increase their production capacity of everything, including oil production and gas production. What's your outlook for that across Asia in 2026?
Well, okay, basically, China's the only place where we have new refining capacity, right? But at the same time, while there is new refining capacity, most of it gets towards petchem production, right? And China's export of transportation fuels, diesel, gasoline, have actually fallen over the last 3-4 years, right? The ratio between export and output has shrunk for both gasoline and diesel over the last 3 years. Last year, it was like just over 3%, right? Versus, say, pre-COVID levels of 11, 12%. And it's been steadily dropping, was like 6% in 22, 5% in 23, 4-5% in 24, and now it's lower, right? And despite the gas oil margins being good this year, right, China did not rush to export, right? And I would expect the increased capacity is mostly petchems. And in any case, a lot of new refineries.
You're saying increased capacity will not be for export?
To produce petchem. No, to produce petchems. Is it not to produce transportation fuels?
Right.
So I do not expect transportation fuels production to grow. In fact, it has also steadily dropped over the last 3 years we had to hit a record high of 18 million tons a month in 2023. Last year, it was about 16 million tons a month.
Okay, we got to give Peter the last word here because we've 1 minute. Peter, your predictions of note. I heard you there saying that you expect the stock markets to continue on a tear across Asia. What else would you see?
Well, I think, Sean, I'll look at precious metals. We've had the most incredible year as far as 25. Silver up 150%. The Kospi's up the best part of 100%. I mean, that's incredible what we've seen.
Gold doubled in 25.
Exactly. So I'm expecting there to be relatively strong GDP, good consumer confidence, and that's going to wash across to consumption. So you're going to see.
How about rate cuts? How many more rate cuts from the Fed do you think in 26?
I think you'll get 3. I think you'll see anything up to 100 basis points stripped out, but I'd roll 3 in. So let's just see how it goes. And the Fed chair, I don't know whether he's rolled before May. And if that's the case and Kevin Hassett gets the roll, you could see a rate cut by Easter and another one by end of second quarter.
And gold keeps rallying, silver keeps rallying as a hedge against
silver,
inflation.
I got silver probably about at 120. Let's have a close look at it once it hits that. Gold will be a 52 handle, and I think that it's very, very strong. And these could be achieved within the first 2 quarters. So it's very, very strong. US dollar is going to come under pressure to the downside, and I think it's going to be an incredible year for trading.
Well, we're going to have to wrap it up there because the other panel is up and running. It's 8:30 in Dubai. These 3 amazing men, Yan Chong Yo, Director Research at Wood Mackenzie in Singapore, Peter McGuire, CEO Australia Trading.com there in Sydney, and Victor Yang, Senior Analyst, JLC Network Technology in China. Great to have your contributions this morning to the Global Energy Outlook Forum, and your predictions are much appreciated, and we're going to hold them to you because we're going to publish them all over the place. Have a great day, everybody. Stay tuned. Next session's up and running.
Thanks, Sean.
Cheers, everybody. Bye.
Bye.